Everybody, this is Jim at SP500chart.com. It's about 4:30 on February 27th, 2013. And before we get started, I just have to remind you, as always, bear with me, that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. Let's take a look. We're looking at a 30-minute chart here. Excuse me. And wow, what a funky past 3 days. And you know, all I got to say is two things. First thing, we know going in to any form of technical analysis that the goal is not to get it right 100% of the time. If you think you're going to do it, you're thinking wrong. If you think you might do it, you're gonna mess up. But you have to leave room for error. Leave room for the market to show you something you weren't expecting, or your mindset is wrong. In other words, if you think you're going to put everything into a nice, neat little box where everything always works out as you think it's going to, then it's not going to. It's just not, because there are too many unforeseen things in the world. There are too many unforeseen events. And I know that I speak in terms of events not being the real market drivers. And I still believe that. But there are also too many unforeseen things in people's heads that you can't see and that the news can't report. So that's why when we do an analysis of tactical analysis, we if we do it right, we think in terms of possibilities. We think in terms of probabilities, and never think in terms of absolute certainties. And I preface that by saying that yesterday, I'll own up to something that sure looked like it was setting up, but today just blew it out of the water. And that was a return to this horizontal line right here. The market absolutely made it look like a textbook pullback to broken support, and then we should sell off today. In other words, what we saw happen today is the right shape. It just should have been going down. That's what I thought we would likely see today. But, and I really don't want to say anything in my defense, because I don't have anything to defend. If you are mature about this, and I think most of you are, then you look at this and you say, well, it doesn't always work. And today didn't work. But one small thing that I do want to say to you is, we knew coming into the past couple of days that I was expecting a head and shoulders development here as a distinct possibility. And what I think happened earlier in the week with the breaking down of this line right here, that just looked to be too soon. And I mentioned also at the time that the degree to which this plunge took place was almost exactly the same degree that we got above this range back on the beginning of the day on Monday, very, very early in the session. So I'm not trying to make excuses. What I'm trying to say is there was always room for this in my thinking, that we had this truncated pattern, and we had an exaggerated move upward followed by an exaggerated move downwards that never really met that 1% that I like to see as a confirmed break either above or below a resistance line. Now we got it when we broke this red line right here. This was a large enough break to where this counts. This down here, it wasn't quite, it wasn't big enough to say for sure now there's enough removal of ourselves from this area to where it will change the market psychology going forward. Now we're back above this line. Why? I don't know. Maybe this is setting up an oscillation. I really can't tell you. But I do feel that I need to share with you what I think are two possibilities. And unfortunately, they have different outcomes. Fortunately, we've got some areas that can help us out with this. We've got some trend lines. We've got some things we can watch that hopefully will give us an idea which of these things is going to happen. The first thing I want to say is this, in very general terms. When you break a rising channel, which we did unmistakably back on February 20 and 21, you break a rising channel for one of two reasons. And one reason is you're setting up a reversal. Now, folks, I still think this is a pretty likely spot for a reversal based upon our brown line that we've been looking at that has pretty closely followed our intermediate tops for the past 4 years. Okay? That alone tells me to be on the lookout for a reversal. However, I also think that we may be nearing a major top. And if that is the case, then you know those events sometimes get really squirrely. By the way, I used to have squirrels in my attic. Paid $2,000 to have my attic squirrel-proofed a number of years ago. It works. So if you got squirrels and you got $2,000 and you want to get rid of them, do it. What you gain in sleep is worth the investment. But what I want to say here is when things get squirrely, it means you can't, from day to day, things are running on raw emotions. People are rushing after the market. Then people are rushing out of the market. And that's why oftentimes you see volatility at market turns. You especially see volatility at market bottoms. But that said, that's one of the things that can happen when you have a reverse, when you have a broken channel. You're setting up a reversal. The other thing that can happen is you're setting up a consolidation move that instead of reversing ends up as a continuation pattern. And this is why with today's move, I feel inclined to present a second opinion coming from the same guy, but a second opinion. And that is, if we were to take this line right here and turn it purple, you know what that means? If you've been hanging around a while, that means could we be setting up a continuation pattern at this point in time? And if we are, excuse me, we've got a neckline right here. And this is very preliminary. This doesn't mean this is where this line has to be, because we don't know that this upwards move ended today. It may continue tomorrow. But just to give you an idea, it is possible that we are working ourselves to the right of this pattern, and if we back off to an hour-long chart, you can see that each time we've gotten down to this yellow line, the market has reversed. So was this close enough for us to see a reversal at this point? It may be. So looking at the chart, I see two possibilities. By the way, this line is drawn there for a reason, because it's this top and this top right here. It's, you know, so if we are setting up a if the S&P is still making a head and shoulders top, then we should not see this move get much higher. We should turn back down and start to work ourselves a little bit to the right, more in line with this range, and then we may get a legitimate, technically significant break of this neckline. And if we do, I think we likely will end up taking out this line too, which would mean the entire move from November 2012 to the present, if we break this line right here, we should consider that move to have entered now reversal territory. We didn't do that with that little move yesterday underneath this neckline. So guys, all of that to say, I'm gotta watch this line and watch this line. Getting back into this 1498, 1515 range. I always thought that was a possibility, maybe even a desirable thing. But what surprised me today was getting up over 1515 and actually getting up briefly to 1520. And I don't feel that I have to share what I do personally in the markets. But I will tell you that when we tag this line up here, I hedged with a short position, just as a hedge against the long positions that I still have, and those long positions, some of them have negative betas. So if we come down for the right reasons, some of the things I'm holding, I probably will continue to hold. Others I'll liquidate. But anyway, guys, there is your video for February 27th, 2013. And also I just want to point out that yesterday when we broke this downward channel, you know, maybe a little bit more significance could have been placed on that event, because obviously when we broke that, the market broke it with some gusto. So let's do one more thing for jollies. That sure is a steep line. Let's see if we can kind of define a rising channel on this 5-minute chart. And we'll go to the 10-minute version. I'm going to scale in a little bit, and this is the chart that you will link to from the live charts section at SP500. That's one of the things I do, is I provide a link to the working chart each day. So guys, there you have it. What an interesting turn of events. Let's see what let's see when this steep rising channel breaks. Let's see what we get out of it. I want to thank you again for watching. I want to thank you for your subscription, your patience, because this doesn't always work, and your kind support. Take care, everyone.